Hey there, I'm Jared with the Annuity Expert. Today, we're going over a common question we get. How does the market perform in an election year? 2024 has been an interesting year for the markets. And with the U.S. presidential election around the corner, it's important for investors to understand how these factors affect the financial landscape. First, let's talk about what's shaping the financial landscape in 2024. We've seen a couple of key factors: U.S. Federal Reserve rate cuts, the upcoming presidential election, and broader economic indicators. For investors, understanding these trends is crucial. Today, we'll cover how rate cuts impact the markets, how the market has historically performed during election years, and some strategies to navigate market volatility. Now, let's discuss the Federal Reserve's role. In September 2024, the Fed cut interest rates by 50 basis points. Historically, this has had a mixed impact on markets. On average, the S&P 500 has returned 7.2% 1 year after a rate cut. But there's a catch. If there's no recession, the returns averaged a strong 19.6%. However, if a recession follows the cuts, returns can drop to negative 2.7%. This shows how important it is to consider the broader economic picture when investing during times of policy change. Now, let's talk about the U.S. presidential elections and market performance. Historically, markets experience increased volatility leading up to elections, particularly between July and November. But don't panic, this is normal. In fact, despite the short-term uncertainty, markets tend to bounce back post-election. On average, there's a 16.2% rally in the 8 months following the election, and over the next decade, markets have historically averaged an 11.6% annual gain. Let's also debunk a few myths. Some people believe that stocks underperform during election years or that one political party is better for the market. In reality, the market has delivered strong returns regardless of which party is in power. Interestingly, markets have actually performed best when the presidential approval rating was below 50%. Volatility doesn't have to be a bad thing for investors. In fact, it can create great opportunities. The VIX, or Volatility Index, measures market fear. Historically, when the VIX was elevated above 35, investors who stayed in the market saw returns of over 30% in the following year. On the flip side, when the VIX was lower, returns averaged 9.7%. So instead of fearing market volatility, you can use it as an opportunity to potentially capture larger gains. Just keep a long-term focus. The outcome of the election can also influence different sectors of the market, depending on the political agenda of the winning party. For example, if Republicans win, sectors like banks and traditional energy could benefit from deregulation and relaxed policies. But if Democrats win, sectors like renewable energy, healthcare, and telecommunications could get a boost from stronger environmental regulations and government spending. Understanding which sectors are likely to benefit can help investors make more strategic decisions during an election year. It's important to remember that in the long run, the market has shown resilience through both political and economic cycles. Yes, there's always some intra-year volatility with an average decline of about 14.8%. But despite that, 22 of the past 31 years have delivered positive annual returns. Even during challenging times like recessions, markets tend to post strong gains 1, 3, and 5 years after the downturn. This is why it's crucial for investors to stay the course and focus on long-term gains. Now, as we look at the current market environment in 2024, here are a few key metrics to keep in mind. The S&P 500 forward price to earnings ratio is 21.5 times higher than the long-term average of 15.8. Dividend yields are at 1.4%, slightly below the historical average of 2.0%. And the U.S. 10-year Treasury yield sits at 3.81%. While valuations are high, it's important to consider these in the context of historical performance and economic trends when making long-term investment decisions. So, what's the bottom line? The 2024 financial landscape presents both challenges and opportunities for investors. By understanding historical trends, debunking common myths, and focusing on long-term strategies, you can confidently navigate this election year's market volatility. Here are the key takeaways. Stay invested during volatile periods to capture long-term gains. Don't let election year uncertainty derail your investment strategy. Look for opportunities in sectors that could benefit from political shifts. Use market volatility as a potential opportunity for enhanced returns. So, if you want to learn more, don't hesitate to reach out. You can visit us online at The Annuity Expert or call to schedule a free consultation at 770-755-1565. Again, that's 770-755-1565. Also, if you want more tips on your retirement, like and subscribe. Remember, it's never too early to start planning for your future.